Don't be basic. Let me tell you why. Every day, you see a bunch of ads. But how many do you actually remember, if any? What about that weird one? The thing is, being different is what gets companies noticed. However, differentiation alone is not enough. A few other things need to align for a company to succeed and eventually turn into a winning investment. This is also reinforced in this video by Harvard Business Review, which details that a company has an opportunity to differentiate itself at every point of contact with its customers. And that's what you'll find in this video. But first, let's talk about why seek differentiation. There are two primary ways for a company to succeed. 1. Sell something cheaper than the competition. 2. Sell something better than the competition. When it comes to the first group, there is one major issue. You're scraping the bottom. You can't expect to make a big amount of money if your only competitive advantage is price. This is because sooner or later, another company will swoop in with cheaper prices. It's not sustainable over the long term and essentially comprises a losing strategy. That's why you need to be different. In order to be irreplaceable, one must always be different. Coco Chanel. The same applies for companies. Let me give you an example. Starbucks doesn't just sell coffee, they offer an experience. They personalize drinks with special toppings and serve them in cups labeled with customers' names. No wonder they're more successful than the average coffee place. And that shows in the stock performance too. Here is another example. Clearly, this type of performance is driven by differentiated products and strong financial metrics from seeking alpha. I know what you're thinking. What's in it for me? As an investor, it's your job to seek durable stocks. As noted in a previous video, my core investing principles, a durable competitive advantage will enable a company to pull itself out of almost any bad news hit from the stock market, and it will better enable the profound effects of compounding. Compound interest needs time, and therefore, durability is an essential factor. If you buy a stock and it goes bankrupt, that's on you, oftentimes due to the fact you didn't do your research properly. Sorry for being harsh, but sometimes that's the only way to get a message out. To make it up to you, here is a present. 10 winning companies. Here is a list of 10 companies that succeeded through differentiation. Return on invested capital, ROIC, is shown as 5-year historical average, easily extracted using Seeking Alpha Premium, our recommended investment analysis tool. Apple Incorporated, renowned for its seamless integration of hardware and software, offering a premium user experience unparalleled in the tech industry. ROIC 29.2%. Microsoft, MSFT, a tech leader known for groundbreaking software and cloud solutions. With a focus on innovation, Microsoft boasts a robust ROIC of 19.3%. Deckers, Deck, a prominent player in footwear, particularly known for its iconic UGG brand. With a commitment to quality and innovation, Deckers maintains a strong ROIC of 20.1%. Netflix, Incorporated, revolutionized entertainment by providing a vast library of on-demand content, including original programming, through a user-friendly streaming platform. ROIC 10.1%. Nike Incorporated, known for its innovation in sports footwear and apparel design, backed by strong marketing and endorsements from top athletes. ROIC 16.8%. Starbucks Corporation creates a unique cafe experience with personalized drinks, a welcoming ambiance, and a strong emphasis on customer service and community engagement. ROIC 18.6%. Adobe Incorporated dominates the creative software market with its suite of industry-standard tools and services for design, photography, and digital marketing. ROIC 17.9%. Visa, V, a global leader in digital payments, facilitating secure and seamless transactions worldwide. With an impressive ROIC of 23.9%, Visa continues to drive innovation in the financial technology sector. Chipotle, Mexican Grill, Incorporated, stands out for its commitment to fresh, customizable, and ethically sourced ingredients in its fast casual Mexican cuisine. ROIC 15.1%. Lululemon Athletica Incorporated combines high-quality materials, fashionable designs, and a lifestyle-focused approach in its athletic apparel, appealing to a broader market beyond just sportswear. ROIC 24.5%. Conclusion: I don't necessarily want you to buy these stocks. These are widely known brands that have been around a while, so everyone already knows about them. And the chances of you making 10x on that investment are smaller at this point, although they may make great additions to your portfolio at the right price. Instead, find younger companies that you believe are different and send them to me so we can discuss. Companies that are producing differentiated products or providing differentiated services. If you found this video helpful, don't forget to like, share, and subscribe, and check out the other videos on this channel to learn more about investing. Thanks for watching. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.